like it wouldn't surprise me if that happened, but I think a lot of people are also counting on policy error here from they're the central banks. And I mean, if you look at the 80s, using that comparison, it's a really good example, right? If you look at sort of that climb to your 21 or 22% interest rate, right? On the way up, there was actually a little bit of a dip, right? Because inflation looked to have been stabilizing or rolling over, and they actually dropped rates because it was really doing brutal things to the economy, right? And that ended up being a huge mistake.
Welcome to the Tom Storey Show with Steve Karrasch and Tom Storey, where we discuss everything real estate or whatever else is on our minds.
Hey, it's Tom, and you're about to listen to a new episode of the Tom Storey Show. I've got a quick favor to ask you just before we get into this week's show. If you're enjoying this podcast, if you could share it with a friend or go to Apple Podcasts and give us a rating, a 5-star rating would be amazing. If you've been watching on YouTube, if you could like this video, subscribe to the channel, and ring that bell so you never miss out on future videos. Anyways, that's it. I hope you enjoy the show. Let's get to it. Welcome back to the Tom Storey Show. We have an awesome guest this week. He's built an awesome following on many different social media platforms. He's a TikToker now, very good at TikToking. So that's what you're known for now, Daniel.
Yeah, that's my dance moves, right?
Yeah, he's got great moves. You should follow him on TikTok. Definitely follow him on Twitter. Mr. Daniel Foch has joined us. So thank you for joining the podcast.
Yeah, pleasure to be here. Thank you for having me on. I'm really enjoying what you're doing. I'm glad you entered the podcast space. Honestly, you got a good voice for the real estate industry. So
thanks,
nice
man.
to have you.
I appreciate that. You just launched a podcast as well, and you're making us look like little minnows because off the bat, you're like ranked #1 on Apple Podcasts. So what's that experience been like?
That's interesting, right? I mean, I was doing podcasting for like 3 years and just throwing episodes out into the abyss, right? And getting nothing. So I think that, if there's one takeaway, it's like hard work does actually pay off in this space and persistence, because out of nowhere, these guys were just like, hey, we love what you're doing. We noticed that your podcast kind of sucks. Like, do you want to do a good job at it? And I was like, yeah, okay. And so I think the launch probably had a big part to do with them. Like they're getting, 15, 20,000 listens consistently. That's the Canadian Investor podcast.
Yep.
And so they basically just did a real estate spinoff for us. So I don't know how much of that launch was especially accredited to myself and Nick, but grateful for it nonetheless. It's been spectacular, and the support and feedback has been overwhelming. So really happy.
Do you think that the success so far, and you're about like 5 episodes in now on yours?
Yeah, we just released number 6 today. I think.
Awesome.
Yeah.
So what do you think the difference is from what you were doing for the last 3 years? Same content, but wasn't getting the same response. Do you think it's because of the visibility of the platform that you went to and did it through them? Or is it just now you learned something that you weren't doing previously?
Yeah, I think honestly for me, like I wasn't after a certain point, like when I started doing podcasts, it was really to try and document my journey of learning as much as I could about real estate. And after a certain point, I learned a lot to the point that like people more wanted, like guests were actually more wanting to ask me questions. Right. And so now this podcast is like, we're going to have very minimal guests, and it's more about analysis and granularity and really looking at the market and deals, even like on a specific deal specific basis. And so it's a bit more of like that research focused kind of thing. You get some of these podcasts where there's just 2 hosts just going through like murder mysteries or whatever, stuff like that. And I think that was kind of missing from the real estate space, to be honest with you. And so that's I think what probably was the big difference. And I actually have had a couple of people reach out to me now, even like, how did you build an audience on TikTok so fast? Like, well, I learned that like I'm good at talking about charts and making them succinct. And that's once I figured out that like I'm a one-trick pony, man. It's like data and like being cynical, right? and certain platforms, like it's easy to do that.
Can I ask you a question about the cynical part of it?
Sure.
So I'll tell you this. So I mean, I don't know how we initially got connected. I think you knew Cam, who works on my team from maybe back in the day. And
I did my undergrad with him.
Yeah, so there you go. So he had brought your name up before. And then I will tell you that like in the past 2 years, many people in Toronto, in my office, real estate agents that I know were like, who's this Foch guy? Like
Right.
you've really just like popped, not out of nowhere, but like you're
Yeah.
everywhere. And you had joked before you came on the podcast. I was like, you're like, who are the listeners? I'm like, oh, it's real estate agents and consumers. You're like, well, realtors don't like me anyways.
Yeah.
So
Yeah.
can you walk me through, like, listen, me and Steve get how this works. If you
Yeah.
want more attention, you have to be cynical. You have to run with the headlines, and then you can educate people because you've grabbed them.
Yeah.
What's your experience been like putting out content that is more, even when the market was going crazy, you were kind of a voice of reason, like, hey guys, don't be stupid here. Walk me through like that, why you took that approach.
Well, honestly, because like I take my fiduciary duty as a realtor pretty seriously, and like I always felt that there was a lot of risk apparent in the market. Like maybe not so much between 2017 and pre-COVID, but as soon as monetary policy really pushed the market up in a very unsustainable way, I was like, this is a very risk-on environment, right? And I think that call will ultimately end up being correct. I would imagine. I think that we'll probably see almost all COVID gains erased in at least the markets that I trade in. So hopefully, that it wasn't all in vain, but I think that's kind of what it is. You just have to be really steadfast in your beliefs as whatever you are. Like you can't just be, people see right through individuals who are peddling some thesis and then flip-flopping back and forth or whatever it is. Like I was wrong, and I was happy to be wrong for 2 years, because I still, what I was trying to say was that it wasn't a safe environment to buy real estate. And it doesn't mean you shouldn't buy it, but I think that you should understand that the risks that you're taking, right? And I think that this is a massive investment for most people, and I think that unanimously consumers consider it to be an investment. So if we're offering investment advice, we need, anybody else who's selling $1 million worth of securities has to do KYC forms and risk analysis, and to prove that their consumer is aware of everything that's going on. And we don't really have that in our business. So that's kind of really where that came from. Was just taking my duty to the consumer seriously. And that was the only way that I knew how to do it. Right. I think a lot of other agents know how to do it on a more qualitative basis, like understanding their clients' emotions and stuff like that. But I'm not exceptionally emotionally intelligent person, to be honest with you. So
well, you're talking to two other robots.
Side. Yeah.
Yeah, me and Steve are data guys as well.
This episode of the Tom Storey Show is brought to you by the Real Estate Video Course. Today's real estate industry has changed, and you can no longer rely primarily on door knocking, cold calling, and geo-farming. While these strategies still work, video provides something that these traditional methods just don't, and that is leads that reach out to you because of you and the message and content that you are providing. I believe that video is king, and that through video, you can leverage your message, create stronger relationships, and become the authority on real estate in your marketplace. The Real Estate Video Course is a 5-part course that will teach you the fundamentals of video, including why it's so impactful, the equipment that you need to invest in to get started, and the proven tips and strategies used to ensure long-term success. So go to videocourselogin.com today to become a true creator, level up your editing and production skills, and develop your real estate video plan to leverage your message to current and prospective clients. That's videocourselogin.com. The link is below in the description, and don't forget to use the discount code TOMSHOW at checkout for 10% off any purchase. That's videocourselogin.com and use the checkout code TOMSHOW. That's TOMSHOW.
Can I ask you on a, we dig in a lot too. You do different types, you go to different platforms to put out different types of content. And at the end of the day, I know for myself, the reason why I started being active on Instagram and I tried Twitter for a moment and then decided I'm out because I can't handle, I want to dig into that with you after, by the way.
Yeah, for sure.
And then YouTube, all roads lead down to me to appointment setting. I run a business and everything that I do leads to appointments that turns to business and things like that. How have you found taking the opposite approach of a lot of what real estate agents were doing over the last 2 years, being a little bit more cynical? Has it turned into building your business as well because the clients that reach out already feel like they know you?
Yeah, and I think I attract clients. Like I think the really cool part about using social media is like if you build a brand that describes your character well, and people get to know you through the social media, you attract clients who are a good fit for you, right? Like there are people who are extremely bullish, or maybe, I don't know, like a little bit more positive about all matters of life that probably are like, I would never want to work with that guy. Right. But the type of people who would work well with me, they already know what they're getting themselves into. Right. So I think that it creates a bit of a selection bias. The other thing is like, I don't really talk shop that much on social. Like I really just talk about, and Tom, you do this similarly, right? Like you're just talking broadly about trying to create value for people, right? And if they want to talk shop, they can book a call with you. And that's where like, I imagine you're probably a pretty damn good closer, right? So if you get on the call with somebody, that's where you can convert, but you're not trying to convert from the start.
No.
And I'm the same way, right? Like I'll mention that I'm working on a deal or whatever, like in a Twitter space, if I'm talking about an investment that I'm doing and maybe we've got a couple more limited partner spots or whatever it is, then people will just DM me and be like, hey, like I'm looking to invest. Like I'd love to jump in on one of these deals you're doing or whatever. And like, that's the end game for me is like people investing safely. I don't necessarily want to be a realtor, to be honest, like in the fullness of time. Like, I think I want to, like, I love doing deals and transacting. And if I want to be selling bigger product and I want my clients to be investors with me. Right.
So you want to turn to multifamily mostly on the investment side?
Yeah, like I think that's primarily what I'm doing. Like COVID sort of threw a bit of a wrench in that because, my multifamily investors were getting outbid by single family buyers. Like I was doing a lot of land assembly, up down duplexes on major arterial roads in the Greater Toronto area. It was probably my bread and butter. I probably sold more off market. I would say more of those up down duplexes on main roads that could be developed in the future than anybody else. And those just like stopped being economical for investors. Right. And so I had to pivot a little bit. And that's kind of where the content got into more like house prices and what it means for the average consumer, et cetera. Before, and I got lucky because like the media liked it, consumers liked it. And now I've kind of become a bit of a commentator in that respect. But prior to that, it was just like really how to invest in real estate well, which I'm kind of finally going full circle into with the Canadian Real Estate Investor Podcast, because the market is becoming opportune for investment for the first time in 3 years.
So if you're a little bit, yeah, totally. If you're a little bit cynical about the market, how does your advice kind of flow with that? Right? Like if you've been relatively negative saying, hey, this isn't going to sustain over the next little bit, or how do you sell properties? Is it only listings? You're like telling people to get out, or, you got people that are purchasing. How does that flow?
Yeah. So it was actually pretty interesting. I didn't do a buy side deal until April of this year. So I was only doing listings, and I've done about the same amount of volume as I did last year. A lot of people reading my advice and saying, shit, I got to get out of this market, and saying that's the guy I want to list my property because he has the same awareness of the market as I want or whatever. So it was a big part, honestly. Like when there's fear, I would say, and I think like, Steve in BC would probably have a similar philosophy, right? Steve Soretsky, like people go to they want certainty, right? They want somebody who can rationalize that fear sentiment for them. And we were in a fear-based market for the beginning of this year, right? And it shows up just as much on the listing side. Like a lot of people think being bullish is great for the buy side, but being bearish doesn't hurt on the listing side, right? And no, people don't really necessarily catch that part, right? So that's number one. But I was doing a lot of buy side deals for myself and for other investors that I work with. Like I have a small fund. We purchased a lot of property in Northern Ontario and other areas, and we were buying deals. I still have a couple of deals in the pipeline from early this year, right? And I don't expect them to be in positive equity positions, but they fit the mandate that we're purchasing well. And I think that if you can make it your business to find investments that are compelling, even when you acknowledge the absolute worst case scenario, then that's doing your job well as a realtor, or as whatever type of investment you're trying to sell, right? And it's like, is this a good deal independent of what the market's doing? Because nobody's ever going to get the macro right. We don't really have.
What makes that a good deal, though? What are you looking for if you're like, okay, I'm going to buy this property tomorrow and I know it's going to be worth less 6 months from now? What is it you're looking for that makes sense?
Right. The ability for me to add value, and then the fundamentals. So does it cash flow? I mean, it's not even really cash flow. Like we run everything at a break even. But like, so we'll lever it up as high as we can for it to break even, but can I create value in this property is the big one, right? So, again, main roads is like primarily what we're buying. So stuff that can be developed into density in the future, and then something that has holding income for the next 5 to 10 years while we go through that development process. That's pretty much it, honestly.
So you're looking long term, right? Like that's got to
Yeah,
be the outlook.
Yeah, I would say real estate is a long-term asset. I mean, I think people should be buying any asset for forever. Like, unless you're like a professional trader in any, like, commodities, equities, real estate, whatever, then you should be focusing all of your energy on making as much money as you can in your industry, your job, because that's probably what you're the best in the world at doing. That's probably the best source of income that you're going to be able to generate. And then you should be rolling as much of that into dollar cost averaging into an asset that you believe in or you're familiar in, be it real estate, be it equities, be it Bitcoin, whatever it is, right?
Are you all in real estate, or do you have money in the stock market and in other avenues as well?
Yeah, I'm in other avenues. Actually, I think most of the money that most of the wealth that I've accumulated is from other sources. Like, I got into Bitcoin mining pretty early. So
On
I
the
was very
mining side.
fortunate. Yeah, that's the only I've always been attracted to passive income because people describe passive income like a real estate as passive income in the past, but I realized like it's not at all. It's like it's probably like one of the most relationship intensive businesses.
It's very
I've ever
active
been.
income.
Yeah. Like, and yeah, like landlording it's a business, right? And so yeah, like the crypto side has been good, and then I obviously just try and invest responsibly into like long, stable Canadian compounding businesses, right? Like, I believe in compound interest. I believe in getting rich slow.
Can I ask you on the Twitter side of things? So
Of course.
I'll be very honest with you here. The best thing I did for my mental health over the last 3 months was not interact on Twitter.
Right.
I'll be very true. Like I didn't have a good experience going there. I was putting the same stuff I was putting everywhere else, and I was just getting hit at.
So he picked YouTube comments instead.
No, but weirdly though, my YouTube viewers are like, for the most 99% positive, where Twitter, it's like you say the sky is blue. They're like, no, it's not, you idiot. It's based on this fundamental of this. So you and Nazma, I believe, are the two that have seemed to not only win over most people on Twitter, not everybody, obviously. Jordan's been pretty good at it too.
Yeah.
And by no means am I throwing this overarching thing of saying that everyone that comments on there is a troll, but there's a whole lot of it going on there. You seem to even have won over those people. How did you do that? I'm seriously like curious.
Yeah. I just think that everybody has something to say, right? And so like I'll engage people even if like they make a comment that I don't really necessarily think is appropriate or correct or whatever. Like I'm not going to like blast them or try and make them look stupid, right? Like I think it's called like killing people with kindness, right? And maybe it's from like Shakespeare or whatever, where that came from, I think, with Taming of the Shrew potentially. But, the idea of like just being so nice to people that like, they're like, fuck, I'm sorry, I don't know if I'm supposed to swear.
You can
on
swear,
this
you
one,
can
but,
swear.
Okay, cool. Yeah. They're like, I can't hate this guy. Right. And so I think that was a big part, like engaging trolls. And I like I like the extreme fringe debates, right? Like some people get pretty crazy, especially on Twitter, but TikTok's the same. Like I think any platform where there's an element of anonymity, Instagram and Facebook, like you don't have that, right? It's not as raw because people go there with their real identities, but you get to like TikTok, Twitter, YouTube, people are showing up with these pseudonyms or fake accounts or whatever, and so they're a lot more liberal with what they say, right? And to me, that's raw dialogue, right? Like it creates a much more real world, and I like that, and I think I've thrived in it. I think honestly, like the bearishness is a big piece, right? Like Twitter is a cynical place, and like being bearish has helped me there, I think. That's pretty much it, honestly. I don't know what else. Like, I think just like trying to be fair, trying to be realistic, and like always trying to get to the like the most true answer, like seeking truth rather than like anything else. Is kind of like what that whole platform is about. I just think it's probably a difference in content, honestly. Like you're not getting a lot of other like realtors are more likely, because I think your content probably caters a little bit more to like professionals who are also into like self-development and wealth creation and whatever, whereas like mine is really for potential investors. I think is like trying to establish a market thesis and whatever. It's it's almost like somewhere between investment banking and like buying your first investment property. You know what I mean?
If you're, I think, more bearish anyway, let's face it, a lot of the trolls are bearish, right?
Yeah.
So you're probably going to win them over a little bit easier. But I think not being on Twitter at all, so not seeing what you're posting, but if you're taking more of that kind of macro look at it, that 10,000 foot view, what Tom and I do so much on anything we're trying to expose people to is like, you're up there in the plane 10,000 feet. Tom and I are on a step ladder 6 inches above everybody else's head, just going, okay, here, like we're thinking transactionally, like trying to
Yeah.
help people make the choice with probably in the next 3 to 6 months, right?
Mm-hmm.
And I think maybe you may be able to win over a lot more people when you're looking at like the overall economy. And I don't know, I'm too stupid to explain that sort of stuff, right? I'm just thinking from a traditional real estate agent's point of view of like, what do I need to do to get that house? I'm looking to buy a house
Right.
for my family. So it's totally different types of content, I would assume, because not a lot of those guys, like people that are tuning into you, at least through that source, are probably continuing to tune into you, where my audience might be something that's more of a 6-month relationship,
Right.
right?
Yeah. It's a little
Where
more
they're only
transitory.
interested in finding out about how to buy a house in Surrey. And then once they do that, they're kind of out. And then I'm just stuck with the bear trolls again.
Right. It's actually a really interesting point, right? Because like I don't really try to attract people who are looking to transact today. Because I actually don't want a one deal person. I want somebody who wants to build a portfolio and purchase one deal from me for the rest of their life, right? Or one deal per year
Yeah.
from me for the rest of their life, right? And so it's about portfolio strategy, et cetera. And I think that like that's probably where the broad market thesis has helped me, right? Because I think it's like I actually had an investor. There was a tweet. I think I just redid the thread yesterday, I believe, but like I put a thread up in like March of 2021. It was like, which Canadian city are you most bullish on? And we were talking a lot. It was a really, really like in-depth thread about all of these different markets, and people were defending their theses and whatever. And we're talking about Cornwall, Ontario. And I actually had a GTA investor who had read the thread and called me, didn't message me or anything, just picked up the phone, called me. He was like, hey, I'm looking at this link right now. It says that you think that the GTA market's going to get smoked and Cornwall, Ontario is going to do really well. He's like, I want to sell everything that I own in the GTA and buy and reallocate it all to Cornwall, Ontario. And I mean, that was many millions of dollars worth of transaction. And the guy made a killing because Cornwall almost doubled from that point, and the GTA did okay. I mean, it went up like 20%, which is all gone now. So that, that's like an example of sort of how that kind of thing works, right? And again, like it's like I'm not even trying to create a thesis myself, right? I'm asking questions, and I think that that's like my whole content started as a pursuit of knowledge kind of thing, and I think Twitter's a good place for that. It's a good place to have those conversations openly and a good dialogue going, and you know what I mean? Like it's a good place to pursue knowledge, to learn, right? And that's kind of what I'm about.
Have you found that Twitter has introduced you to people that you now call like potentially lifelong friends because you've been in the same space and you've communicated with those type of people? And then a second question to that is, as someone that's done a lot of media for the last 5 years, now you're everything I'm quoted in, you're just below me. It's like we're
Right.
on the same, which is so cool. How did
Yeah.
you get on the media? Did that come through Twitter as well?
Yeah, like that's the one thing about Twitter, right? All of the journalists are there, right? Like that's where they share their stuff. It's the best for and like if you go through my Twitter space and just scroll through the people who are tuning in, I think like last night we had like 250, 300 people at peak, which isn't like we've had significantly higher than that, like when we had, Jen Keesmaat on or something like that. But you go through and look and it's like there's a lot of blue check marks. It's just, you can click on their profile and it's journalists who are looking for a headline. And it's not just me, like it's any speaker, like they hear them say something and like people are getting DMs right after that because they're always looking for the next anecdote to put into. And so that's been like, that's probably been the biggest source. Like when I started on Twitter, so I had a bit of a head start because I actually ran a social media business for realtors before I started as a realtor. Yeah.
Really?
I don't really talk
Okay.
that. Yeah. I don't talk that much about it, but I ran a digital agency when I was in like the end of high school to university. I was like part of the Ontario Summer Company.
Huh.
And yeah, so that's kind of like where I got the experience with this stuff. But so I had a Twitter account that had a pretty solid following. So I started with like 4,000 followers, let's say. But then I don't know, I built up a bit of a following this year, and then at the beginning of COVID with like the urban exodus stuff. And then the Twitter spaces, I had about 9,000 followers when I started the Twitter spaces. And now I'm at like 18,000 followers. So I've like doubled my follower count since I started that. And that, I think that's probably been the most profound thing that's ever happened to me in the social media space. And to answer your question in regards to like friendships and stuff, the one thing that I think like people miss for professionals about social media is like, it's such an easy way to attract like-minded people and to find like-minded people and to create
100%.
with like-minded people. And that's been like the biggest thing for me is like, I have developed friendships with people like Jordan or Steve or whatever, where like I never would have met those guys in real life. Right. Because I'm like up in the boonies and they're all in the urban areas doing deals or whatever. And, you know, no disrespect to all of my existing friends, but like, this is like my work life is like 80% of my life, right?
Yep.
Other than I'm like, I have work and I'm a family man. Right. And so being able to build like strong lasting connections over what we're passionate about for this point of our lives, like as people, you know, in the middle of our life is important to me. I think it's good for your mental health. I think it's good for like life security, lifestyle, like all of these different things. Right. And so that's been cool and really, really profound, honestly.
So you're wearing a baseball hat, nice strong beard and a flannel jacket. Did you just go become a lumberjack or what's going on? Are you're out in the sticks now or what?
Well, I've always lived in the in the burbs, I guess. Yeah, but I live about like 45 minutes. I like to say 45 minutes, but most people would say it's
without
an hour,
traffic.
Especially like well, today is going to be like 2-hour drive because it's a long weekend heading. Like I'm in cottage country, basically, right? Like the original cottage country of it was. I mean, yeah. This is actually called the Keswick dinner jacket, by the way, not a lumberjack. But
we call that a Surrey sport coat here.
Yeah, there you go. Do you actually?
Yeah. Yeah, it's
amazing.
the toss up though, right? You got the tough decision between that and the full denim jacket, right?
Right.
Like
yeah.
Both are
tuxedo.
acceptable.
Yeah,
both
for sure.
both are acceptable at Boston Pizza. So
yeah. No, I try and keep it pretty casual. I like mix it up with a suit and tie picture on my socials.
I noticed you just changed that. People. I'm like, what's this?
Yeah, I don't know. I just like to troll a little bit.
So how long do me and Steve have on YouTube before you start a YouTube channel and beat us in subscribers by tenfold?
YouTube's a really tough platform, man. I just started, so I downloaded like Prezi because I've just like, my thing is I always like, I want to be able to do stuff easily, right? Like it has to be easy for me to make content. So I downloaded Prezi to do like presentations, like almost like beside me. I don't know if you've seen it. It's pretty sick. So I started doing that because I need to just like do it live and just be able to like upload it, like kind of like the way Jordan does it. The other thing is like, I feel like there's a lot of people really talking about stuff, like doing stuff well, that like, I don't want to be redundant. Like you're doing really good stuff on YouTube. Steve is, Jordan is, the Canadian Real Estate Show guys, right? So we actually had somebody reach out to us, Nick and I did, about like syndicating the podcast stuff for video. So if that goes well, I don't know, maybe he could, but I feel like it's just going to be a different audience anyway. So I don't think you have to worry at all.
So for this podcast, we started a brand new YouTube channel just for this, where we could have just launched it off of our channels, and both me and Steve, by the way, so this is also Steve from BC. I call him Steve from BC number 2. We'll give Soretsky the number 1 spot. Yeah. So we started a new channel. We've got like, I don't know, 400 people subscribed on the new channel, but the video version of this podcast is pretty much getting over 1,000 views on every episode now. But then I kind of feel like maybe we're splitting the audience between the viewers on YouTube versus the ones that download it. So it's hard to get a full metric of how we're doing. But so far, and I'm sure with yours, you're getting texts from people you didn't know existed or didn't know that were listening. They're like, hey, this is awesome. Thank you so much, which has got to be cool.
Yeah, it is really sweet, especially like with the new audio platform. Like I think we really want to master the audio. Like my thing is like I have really, really bad ADHD. So like I have to be forced to focus on one thing at a time. Otherwise I'll just like do everything very poorly. Right. So it's like I want to do well on the audio side and then just bring somebody on, like a partner too. And again, like if you're starting a content business, like if you're a realtor starting a content business, if that's actually what you want to do, because I didn't know that was what I wanted to do, but now that I've actually done it, I'm like, holy shit, this is actually real. I could probably make some real money here. And like, this is what I'm passionate about. I love, storytelling in the real estate space. I think that I have a relatively unique voice for it. That's like, you have to be willing to have partners or pay people or like whatever it is, right? Like you can't have it all and you can't do it all, and you definitely can't do it all and still be good at your job as a realtor, right? Like when I first ever started the podcast and I was putting a ton of work into it, I literally had clients who were like pissed at me. They're like, hey, like you didn't text me back in like 30 minutes, but I saw you put this podcast episode out. And I'm like, seriously? But this is what happens, right? So you got to like really figure out how to balance it. And I think the easiest way to do that is like one platform at a time, right? YouTube has been a freaking tough one, man. I'm really like focused on TikTok right now. And then I'm like I just like put out a YouTube video recently. Some like when there's something that needs to be like more exhaustive, I'll try and do it. And I was doing market reports with the guys from the Habistat that have been getting good traction. They're like visual. I mean, that's a visual thing, right? You need to look at those charts and stuff. Like, I think I'll probably just stick to that stuff for now because like I don't know if anybody else is necessarily doing it, and then kind of just go from there.
If me and Steve can get YouTube following, I promise you can do it too. If you can crack Twitter, man, and you can do what you're doing on TikTok, you're going to come to YouTube. You're going to love it. It's just different. It's just different. And it is harder than just, and this isn't saying that what you're doing is easy because it's not, but it's harder to do long form stuff on YouTube than it is to just do the green screen background and talk about a graph, because that doesn't, just time wise, it doesn't take as long, right?
Yeah. I think expertise wise as well. Like I can speak well, quick, like in short bits, but for the longer format, it would require a lot of post-production or a lot of speech training for me, I think, to do it well, right? Like I do have a lot of ums and ahs and stuff like that. And
that's fine.
Editing takes care of that. Yeah, man, it doesn't matter.
Right.
No, I just think
but that's the thing, right? Bringing on an editor.
Yeah. You can, I mean, it depends what you want to do, right? Like Tom's stuff is much more like, hey, I'm going to get out my thought and talk. And then I like to edit and make things silly and stupid just because, like you said, it attracts the right type of people, right? Like I attract people who enjoy my terrible sense of humor, right? So I can be more me when I meet those people, right? So you can do it, long form, no edits, and you're good. I just think there's such a platform there for someone like you that could just take what you're already, like if you're already having the conversation for a podcast, is your podcast just straight up conversation like this, or is it scripted or edited or anything?
Yeah, so we do them like they're pretty scripted, but so like we've talked about maybe even doing like screen shares, because we go through a lot of data and like we put all the charts in the show notes, and then maybe just doing those and like having a video portion. But honestly, we might actually like put that out as like a Patreon thing, because like I know the guys on the Canadian Investor Podcast do like Patreon their show notes, because they're extremely thorough. Like they're like investment memorandum documents, right? So like, and most of my show notes have been like that so far. So I haven't really put too much thought into it, honestly. Like I'm just kind of trying to focus on one thing at a time. I'd love to do YouTube eventually. Like we've been talking to somebody else about doing like almost like a travel show on YouTube for Canadian real estate. But so we'll see like if that stuff takes shapes. But like I'm sure you guys get these conversations all the time, right? Like get random people who are like, yo, we should do this, and like, well, maybe we can partner on it, and 80% of them don't happen.
Well, by the way, Dan, what we're currently working on behind the scenes, that is actually going to come out, just to be clear.
What's that?
Well, the stuff, the course at some point. Yeah, that's going to come out. I'm working hard on that. Agree. That's coming out.
Yeah, I agree with that. Jordan and I have been talking about it too, and I think it's just getting everybody to record, right? So, but that'll be huge for sure. I agree.
Yeah.
Let's if we can switch this a little bit to the market and where you see things going, because if if you were fairly correct in thinking that we're going to see at least last year's gains probably lost. I don't know about 2020s, but maybe. Where do you see things going in the future? And if you got to specify which market, go ahead. I don't know how familiar you are with markets outside of your own.
Yeah, no, I would say I'm pretty familiar across the country now, because I've been doing the research for the Canadian Real Estate Investor Podcast. But I mean, my philosophy on bearishness is a bear can never be truly correct unless prices drop below what they were when that person started being bearish. And so I would say that point. Yeah. And so for me, that would be mid 2020, right? I was like, this is out of control, right? Late 2020, maybe when that hockey stick started. And I was like this in 2016, I would say too. And I was maybe a couple months early in 2016. I think I have a pretty good idea of like when things are starting to get a bit exuberant in the market, when you start to feel that stress. And I'm surprised that it pushed as long as it did this year. But I mean, I think myself, Nazma, a couple of others on Twitter, like called the top from within like a week, right?
Yep.
In February.
Yep.
And a lot of that was from like Jason Billingsley as well from Zolo, who has probably some of the richest demand side data.
How far out
market.
do you think you called that? Like you're like, okay, this is where the top is, but were you like a month ahead, 3 months ahead, 6 months ahead?
Well, like I was probably like, I was always saying like, this is bad, but I actually like the top, I think was like February 13th or something like that. And like,
do you know what time on that day?
Yeah, no, I don't. Like what the one sale, it was probably that condo in Milton, right? Like that sold for like freaking 1.5 or something like that.
6:42 p.m. on February the 13th.
Whatever
Everything
that
changed.
sale was, yeah. But like a week later, I was like, the market's gone. I was like, it's over. The top's in, and you know, there was still quite a few, like the bidding wars were still hanging on, but like the offers were getting cut in half and whatever. And so I think from that perspective, like a lot of people look to you now, like a lot of people are looking to me to say, oh, like, well, when should I start buying, or when? I don't know if I'm going to be able to know when the bottom is, right? Like if you were looking for me to find the bottom coming out of 2017, I would have called it wrong, because I thought COVID was going to give us more downside. And I guess it did going into like March or April. There was like that little bit of a confusion market where if you had the nuts to buy, you did very, very well. Like I did 2 buy side deals there, and I literally had somebody double their money in a year on a purchase, and they sold like it was incredible, like life-changing deal for somebody like that. Right. But the bottom's going to be tough. There's so many factors, right, that we don't really know about. And like, you know, the political leadership doesn't really seem to know much about it either. So I think it's like, it's
a nice way of putting it.
Yeah. Well, like nobody, I mean, this is all like animal spirits, right? Like you look at Keynesian economics, that's what they talk about, right? We're just animals, and we have this like, you know, aggregating method of exchange money that allows us to communicate with one another in our animal ways, right? Like nobody really knows what's going to happen here. I think sentiment is a big piece of it, and sentiment is eroding very, very quickly. And I think that, you know, Canadians will be shaken. Like, I think that by the time this is done, a year, and I think it's going to be a year or two, Canadians are no longer going to think that housing only goes up, right? And it'll take a long time for that sentiment to rebuild.
We can only hope that that's what they think. Like, I hope they change their sentiment of like, oh no, I'm just going to keep buying pre-sales and flipping on the paper. Yeah. Like, that's got to stop.
Yeah. Right. And I think that, like, you know, this is a long-term cyclical event. Like, we haven't even gotten to the point where it causes financial stress for households in Canada, right? Like rates rising, it puts financial stress on the household indebtedness. You compound that with the increases in the cost of living, you know, inflation, changes to the micro, like just literally suburbs could just be recoiling. You could maybe blame 5% of that on the financial core opening up again, right? And demand going back to the city, right? And so there's a lot of factors here. I think that if you let it play out, and if you just look at history and say, okay, you know, history doesn't repeat itself, but it rhymes. In 81, it took until 83. So it was Q1 of 81 to Q4 of 83 for prices to go from peak to trough. And Vancouver would have been sort of the poster child for that one.
Yeah.
I think there was like the Expo 86 stuff and whatever, and house prices doubled leading into it. And Vancouver sort of front ran that. So, and Toronto's sort of looking like that now, right? Toronto's really like ahead of the curve on these price declines. So Vancouver would have troughed a little bit earlier. And then basically it took until 86 in Vancouver, 87, I think, in broad market across Canada for prices to start going, or for prices to get back to what they peaked at in 81 on the nominal price. You know, the real price, I don't think we have an inflation adjusted price for that period of time. And then right after that, again, rates were coming back down out of a cycle. 89 prices just went insane, like bananas. And like they were, again, doubling year over year. It's almost like we've heard this before. And then, you know, they dropped very steeply then, I think like 30% to 50% in like a year, and then kind of traded sideways for several into 84, 85, 86, or sorry, 94, 95, 96, depending on the market. So most people say 89 to 94 was the Canadian peak to trough. And then it took until 2002 to get back to your nominal price of being the same. I think it was $275,000, give or take, for the Canadian house price, to reach that 89 peak.
Hey, Dan, sorry, keep going. No, keep going.
Yeah, if you inflation adjust that, it actually took until 2012, right? So to me, it's like, this is it. If you're looking, if that's what we're looking at right now, if that's sort of what we're staring down, then we need to really think about like what this looks like, not just for, okay, when are prices going to go back up or whatever, but like, how do we weather this storm as agents? How do we weather the storm as investors? How do we make, like, this is belt tightening decisions, not like investment decisions, not, you know what I mean? It's like protecting the household balance sheet from my perspective.
So let's look over the next 20 years of the Canadian real estate market and prices and immigration and everything. Hypothetical situation. You have a 30-minute meeting with Trudeau face to face. If you go in there and say, listen, here are my 3 things that you can do right now to bring more inventory to the market. I'm not talking about right now. I'm talking like long term, right? What are the 3 main points we're saying? Listen, and he'll do them. Like, this is hypothetical, obviously.
Yeah.
Okay. Actually, we've got Trudeau on the line. Can you give me a sec? I'll bring him in.
Yeah. I would probably only say, I think 2 things, honestly, that are within the scope of control of the federal government. And one is, I mean, it's really not even within their scope, but you're getting the province talking about taking the keys away from municipalities. I think that needs to happen at a federal level. Like, I think that if we should be centralizing anything in a housing crisis, it should be municipal planning. The further we can get that out of the control of these municipalities that are obviously not capable of doing it at the efficiency level that we need, which is fine. Like, they're trying. Nobody's, insulting them for that. Let's blanket upzone everything to, like, get rid of single family zoning as an example. You've seen it happen in many countries. Go to even just a duplex, right? You've just doubled the potential housing supply output, right? Triplex, now you've tripled it, right? Of what, and so, or blanket, like in Ontario, we have these things called secondary plans, right? So secondary plans are basically these second layers that the province uses to meet their provincial Places to Grow Act in Ontario for the Greater Golden Horseshoe. They go to the municipalities, they say, here's how you use your existing land inventory to meet those growth targets, right? Blanket up, that document exists. We literally have complex planning documents that tell us exactly how many units, what density, what built form you need to put on every single piece of land in the Greater Golden Horseshoe to accommodate the amount of immigration. The targets just aren't being met, right? If you blanket upzone everything, you've just erased probably a $250,000 delta that it would cost a developer to take their property from zoned today to secondary planned. Right there, like, the economic waste of that process is like, and that's just like Texas, right? In Texas, like, as long as you present a engineered drawing that meets the criteria of that site, then you can go pick up building permits the next day, right? So if you could, that would be number one. Number 2 would be, I think, when we are talking about immigration, I have nothing wrong with the way the immigration system works, but I think we need to be focusing on immigrating skilled trades that can help build the houses that they need to live in, right?
Yeah.
And I think that'll actually help to increase the productivity per capita that immigration, because, like, as a country increases their immigration, the productivity per capita decreases, right? The output, the GDP per capita comes down. I think if you start immigrating,
you're never going to pass that stuff through, right? You can't say, hey, we're going to select who we're going to, in today's day and age, you're never going to say, hey, we're not taking the skilled people or the unskilled people from poorer countries. We want skilled people coming in. Like, that's never going to hit a platform right now. I mean, I think you should have, we want skilled workers that can add to our economy, not just take away from it. But I think currently the governments are going, we need the cheapest workers possible to come in here and take all these minimum wage jobs, right?
I don't know, like, necessarily if that's the case, right? Like, I think that there's, like, certain different streams of immigration, right? And the problem is, like, the immigration system in a lot of cases also fails a lot of these people with skill sets that can't actually use them in Canada, right? So it's like, to me, if you're getting somebody who has a skill set where, it's not a red sealed trade, as an example, like a bricklayer or, concrete finisher or something like that, not an electrician or a plumber, they're not going to have a hard time coming here and getting a job, right? Because there's no mismatch of qualification systems, like we're seeing with doctors or engineers or things like that, where people are being promised something by maybe the immigration system or I don't know, pop culture, or whatever, or, whatever it is, secular conversation, that you can go and become a doctor in Canada as an example, and then they show up here and they actually can't, right? And they have this sunk cost of immigration. I think that so not only do you actually help increase the potential value of a Canadian citizenship to a lot of these individuals who want to move here, but you also help, again, increase our ability to solve one of the biggest problems that we're going to have, which is created by in the imbalance in demand and supply, which is building more houses, right? So that's sort of I think that those are the two big things. Like, I think those are the easiest ways where you can increase supply substantially, and also I don't think we're ever going to decrease demand. I think we're an economy that, we need to be grown based on immigration because our birth rate is low. And I mean, it's a good way to grow a country. But until I think that the demand needs to be productive towards the supply problem from my perspective, right?
I just wonder if that won't, I know it won't be well received because, maybe it's going out now. Maybe it's starting to phase out with the idea of like the people that want that 7,000 square foot lot, white picket fence type thing. I guess maybe in the last couple of years that kind of has phased out, but there was still a ton of people that like, I'm not living in attached properties. Like I don't know how that blanket zoning would really work where I am 35 minutes outside of the city, right?
Yeah, I don't know if we necessarily have a choice as Canadians, right? Like, I think I talk a lot about Canada just being late stage capitalistic economy, right? And if you look at Europe or you look at most many late stage capitalistic cities in the United States, you have a high rental tenure, right? And Manhattan would be a good example, and if Toronto and Vancouver want to be world class cities, they kind of just have to accept the reality that this is part of, that's part of it, right? Is that you're going to have low ownership. And it's actually a good thing, because what it does is it challenges Canadians to be otherwise productive with their capital, right? So, I mentioned in a recent episode of the podcast that I'm half Swiss, so I have a lot of friends in Switzerland. I moved there to do a military conscription for a period of time. And most of my Swiss friends are wealthier than my Canadian friends, and none of them own their primary residence, right? It's because they go and they invest their money in other things, right? And they're not investing per se in what is actually a debt trap.
Is that where you have your bank accounts too?
We don't talk about that.
Hey, do you think the Bank of Canada knows what they're doing?
No, I mean, I think that they know that they're following the Federal Reserve. So, by nature, they don't, right? Like, because they just have to kind of wait for what the Fed does. And I mean, I think on the most recent hike, that was abundantly clear, because I would actually, I think that probably the decision was made immediately after that U.S. inflation print, right? Because the inflation print came out like right before it. And I think that had inflation in the States rolled over, we would have probably seen 75 bips from the Bank of Canada, right? So I think and honestly, it's probably the only thing that would allude to me that they know what they're doing is if we actually continue decreasing the spread between the rate lag in the Canadian dollar and the US, or Canadian rate and the US rate, because they're trying to maybe increase a little bit of the buying power of the Canadian dollar to curb some of that inflation on the import side, right?
So you think in September there's another 75 and then we're done for the year? How do you think it plays out?
Yeah, probably 75. And then, it sounds like rate desks are basically pricing in cuts by December or January, right? Which is crazy from my perspective. But
really,
the 3-year, 10-year spread, which is pretty good at predicting, recessions, is basically inverted. So I think that, I'm not super qualified to talk about this stuff, but just from stuff I picked up on the Twitter spaces, it sounds like a variety of different indexes are sort of alluding to the market pricing in cuts from the Fed and the Bank of Canada by December or January.
Emma Pace brought up, we did the Canadian Real Estate Show, like their live stream last night, the ones you guys had done previously.
Yeah.
And she was like, I got to double check this data, so I'm not quoting her on this, but she said that, so there's 3 more meetings, right? It's September, is it November, December? I have to double check. Either way, someone
right.
had told her they have never increased rates in December during that meeting.
Right.
As you go into
I
the
think that's
holidays.
true, actually.
So it's
I
like,
think I saw that quoted in
so that's
Twitter.
kind of interesting. So it's like, do you think they just, September's just final? All right, let's do it. And then how quick do you really think in 2022 we're going to see rates come down a little bit on the variable side?
It could happen, right?
Yeah.
Like, it's just like, it wouldn't surprise me if that happened, but I think a lot of people are also counting on policy error here from the banks. They're the central banks. And I mean, if you look at the 80s, using that comparison, it's a really good example, right? If you look at sort of that climb to your famous 21 or 22% interest rate, right? On the way up, there was actually a little bit of a dip, right? Because inflation looked to have been stabilizing and rolling over, and they actually dropped rates because it was really doing brutal things to the economy, right? And that ended up being a huge mistake, right? And so you notice in the following inflationary period, they used rates very swiftly, and they raised with more velocity, let's say, to try and curb inflation faster. I don't necessarily know whether or not we actually have I don't know if it's within the scope of policy tools to fix a lot of the problems that are happening right now, because we don't know how much of inflation actually comes from, from monetary policy, and how much of it actually comes from things like supply chain disruptions, which aren't going away anytime soon, especially with China locking down, right?
Somebody had told me this, and take this with a huge grain of salt, that in the States, a lot of the big box stores like Target and Walmart are actually now oversupplied because they're getting all the inventory they had ordered before. And where people are going in to return things, they're like, keep it. We'll give you your money back. We don't have anywhere to put it. Is that a real thing that could then now cut into inflation and what's going on right now? There's a word for it, which I don't remember, but
yeah, I think when you see excess inventory and people, like companies selling stuff, or putting stuff on sale, right? When you see clearance sales, et cetera, like that's deflationary, right? Like when you look at that but consumer goods are like not necessarily the major problem, right? Like discretionary spending goes down into a recession, right? So those, like your toys at Walmart or whatever it is, or your blenders or whatever, like those aren't necessarily durable goods, start to decrease as well, right? It's the things that really, like, where you're really seeing the cost of fuel being high, and food, right? The transportation of those goods, where I think it is really going to impact Canadian households. And you put that alongside a interest rate increase and household, record debt servicing costs for household indebtedness, and that's where I think it really becomes an ugly kind of picture.
I'm going to take the other side with the Bank of Canada and say, you know what, I very much think they're extremely intelligent people and they know exactly what they're doing. I think that they have to do their calls on things like interest rates as a result of the information they have, not where they think it's going. So as a result of that, what would have the smartest thing? I was saying this a year ago for sure. Like, start increasing now, please. Quarter point at a time now, please. Right. But when you have, the government going back into lockdowns again last fall, and, all these other issues, they were even still last fall shutting down restaurants again, all that stuff. The bank's like, we can't do this. We can't say everything is fine when the government is saying everything isn't fine, right? So I think that's why I think they're smart enough to go, this is what should have been done, but they don't have the political clout to go, guess what, guys, we're ripping off the Band-Aid now, or we're going to do what we know is right. Like, they have to kind of toe the line a little bit, a lot, right? And you're right, they are basic. Are they making any real decisions, or is it all the U.S. Fed making the decisions?
Yeah. I mean, I think the whole thing is really just to protect that spread between the Canadian and U.S. dollar, right? So that you're not importing inflation. But I think the big piece here that's not often discussed is the war, right? Like, I think that we could have been early, right? But I mean, I don't know if we necessarily would have been as severely late had that not happened.
So what advice are you giving now to, I know you're not as much on the buying side anymore, but if a buyer reaches out to you in a market that, my thought is on GTA is that a lot of the big price drops have happened, and we're going to see 2 or 3 months of dropping off, and then I think maybe it'll just stabilize till the end of the year because new listings aren't coming on at the rate we thought they were going to. But you're seeing the rollover inventory right now. What are you telling your clients that want to, let's say you have someone that wants to move up in the market? Are you looking at this and saying to them, hey, it's actually a decent time to do that?
Yeah, actually, I would say probably if you're selling sort of a price floor product and moving up to a mid-market product, I think there's a bit of a positive element on the spread right now. I mean, the blanket advice that I'm giving to people is like, what mortgage are you planning to purchase with, right? And because I think that you've instantly encoded your risk tolerance into that decision, right? So if you're buying with a fixed rate, then you're probably a lower risk buyer because you don't want to stomach the risk of potential increases in rate hikes or benefit from the potential decreases in rate hikes, right? And so if you're that type of purchaser, then you probably are going to want to buy sooner rather than later because you are in a hurry to purchase with the fixed rate that you have, unless your interest rate outlook is that rates are going to decrease, right? If you're a variable rate buyer, you're going to you obviously have a bit of a higher risk tolerance on the rate side, and you're going to pay that change in capital cost either way, right? If you buy today, then you're buying at that rate, but if that rate goes down, you benefit from it, or if it goes up, you get hurt by it, regardless of whether or not you own the product. Because if you have to buy the same house in a couple of days because you're on a variable, your rate's still moved up, right? And so I think that's where you're kind of seeing the fixed group, at least if they're forward looking negatively on rates, getting into the market sooner rather than later. And then anybody else is sort of adopting a wait and see mentality. And I think that's probably, this is the first time in several years where Canadians have been rewarded for patience in the real estate market. So I would say patience is going to be something that it'd be easy to come by, right? And so I think that's the right thing, is focus on the right asset.
Sorry, if people are looking to wait and see, what are they waiting and seeing for?
I guess if a better deal comes up, like again, if there's I would say there's probably still a little bit more downside risk on price, but there could, if there's upside risk, let's say we see another 75 bips in September, and then prices bottom out. Let's just say hypothetically, I don't think that's the case, but if that happens, like if rates went up 75 or 100 bips, that could cost you $20,000-$30,000 over the course of a mortgage term. If you're waiting for prices to just come down another $10,000, then you should be, then you actually would have done better by purchasing earlier rather than later, right? So I think a lot of people really need to do that math. How much buying power is being erased, and what actual equity change are you looking for, right? Because if you're waiting and the rate increase on the fixed or variable side, if you're buying with a rate that is going up, analyze what the difference in capital cost is going to be over the course of a mortgage term. And most people haven't done that math, right? And I think our job as realtors is maybe to help them with that stuff, right? So, or the mortgage, I think the mortgage side probably has maybe more issues than the real estate space, but people need to know what those numbers look like.
I was always worried if we hit 6% for mortgage rates. Fixed got over 5 for a bit. Now I think I saw one posted like this week at 4.79 because it had come down a bit. In 5 years, do we, all three of us, think that variable rates are going to be above 5%? They're going to come down.
Variable,
right?
Or fixed?
No, variable.
Yeah, no, I don't think so. I think we're probably, but I don't know if rates are going to come down as much as people think. Like, I don't think we'll ever see a 25 basis point overnight rate ever again.
So that's probably a good thing, to be fair. It's probably a great thing, actually. So let's say we go up 75 points in September, and that takes the variable to high 4s, low 5s, and fixed and variable are kind of on par, and you're a buyer. And let's say you're taking the 5-year product. I know there's other alternatives we could talk about. I would personally take the variable if they were equal, because I think that even though it's not going to come down to 2 again, maybe, but it could get down to 3.5, where if I take the 5-year fixed, it's 5% for the next 5 years. But that's me. I'm okay with the fluctuation. What would you do?
Yeah, I'm taking the variable in today's market. Yeah, and even like people who are asking me, I get a lot of people asking me about what should I do. I have a renewal coming up and I'm going to be house poor. I'm like, if you really are going to have a hard time sleeping at night with a variable, take a fix, but make it a short one, right? Like a 1 year or 2 year fix. Because if rates come down, like trust me, if you're going to have a hard time sleeping, if variable rates are bouncing around, you're going to have a really hard time sleeping if you're locked into a 5-year with a $30,000 interest rate penalty and you just realize that you could be renewing at 2% less, right? So just take it in stride until we have a degree of certainty in the market.
Yeah.
One foot in front of the other, right?
Are we going to start seeing listings come to the market that they're 3 years into a fixed rate of 2%? And it's built into the mortgage comments, which was typically left blank on the TREB.
Selling the loans.
Yeah. So I just had a client that was in that exact scenario. She went to her bank. Her bank flat out said to her, "We will not allow you to port this mortgage to somebody else." But then others have said clearly that they would be okay with it. Is that going to become a selling feature?
I don't know if I don't think our market is as simple as it was when selling mortgages was super common, right? Like, I think that it's just the underwriting's too complicated. Like I've been through the same thing because there was a multiplex I was trying to buy up north and it had some really, really sexy debt on it. And I was like, I will buy that mortgage. I'll actually pay you more money for the property if you sell me that mortgage. And it wasn't happening. The lender just was not into it. So
I'm going to use that term from now on. Sexy debt. I like that.
Yeah. Yeah. It's the best kind.
We're gonna wrap it up here in a little bit. I don't want to keep you too much longer, but this has been really fun. This has been a great conversation, and I really appreciate you coming on here. Final thoughts on just what you're seeing right now, what you're talking about on Twitter. You know, your close knit group of friends. You know, what does the consumer maybe not know that's not being talked about out there in the public right now, but in the private conversations is happening right now?
Yeah, I think that. You know, a lot of people mention what, you know, you get these gurus who are talking about like, and they'll say like, oh, don't invest in real estate right now. And then they go and buy like 10 properties. Like I wouldn't necessarily want to be that guy. Right. So the reality is there are deals to be found in every market. Like I think a lot of people want to use the market only goes up thesis or the idea of like understanding whether or not the market's going up and down because it simplifies the process of buying, the decision-making process of buying. It's like, oh, market up. Okay, I'm interested. Market down. Okay, now I'm not. But the reality is, if you're willing to put in the work, the hard work of analyzing hundreds of deals, putting out hundreds of offers, and like maybe that's a bit hyperbolic, but analyzing 10, 20 deals and putting out 10, 20 offers and really pushing to try and get yourself a good deal, like the best deals happen on a deal-by-deal basis, right? And if you have good representation and you have a good market thesis and you're good at analyzing deals and finding good ones and picking good ones, then I think that like the market is already full of opportunity, right? Mm-hmm. Most people just don't want to start looking under all of those rocks to find it, right?
We have a good listenership. I don't know if that's a word. That is real estate agents that listen to us. Now, there are a lot of new people coming into the business because they saw the last 2 years of run up. There's a lot of people that work on their own that are really going to struggle over the next little bit. On the real estate side of things, advice for agents right now, because you're going to have to do 4 times the amount of work to get anywhere close to similar results you were getting previously. That's a fact.
I guess it would depend, right? Like you know, if you were a buyer agent for the past several years, that was a lot of work too, right? Like you're showing hundreds of properties, putting out a lot of work. I mean, I think people got to get back to the roots of what makes somebody successful in this business, right? Like there's no free lunch. You gotta pick up the phone and call people if that's what you do. You gotta like figure out a way to prospect actively, and I would say hone down on a niche. I think that's where this is going to become exceptionally important because right now you can't offer that broad market advice, right? You have to be an expert at one specific product, and it could be your neighborhood, or it could be in up down duplex investors, or it could be your specific condo building. Like you can specialize in any way, right? You can specialize geographically, you can specialize by a specific type of construction, a specific type of product, a specific type of client. You know, it could be ethnicity, et cetera, right? But like you need to be able to offer better advice than anybody else to just that group of people
in your lane.
100%. Like, and just pick and like make that a group of 500, 1,000 people, right? That's it. Like, don't try and build relationships with those people and become the best. It's just like farming, geographical farming, but you can do it with, and on social media, represent that exclusive niche, right? Like, and I think that that's where right now being an authority, like establishing yourself as an authority and somebody who's offering excellent advice to one very specific group of people and creating that loyalty is going to matter more than anything. Because there will be, if you take a group of 1,000 people, you've got enough money to make a living out of just on transaction with that group of 1,000 people on an annual basis, right? So like be the expert for that one specific group of people.
You can almost write down on a whiteboard who exactly that person is and give them a name, like who's this person I'm talking to and I'm creating this content, because then you're speaking directly to them. And the people that it's not for, the one they're not going to watch it anyway. So who cares? Like you're speaking to your people, which I think is awesome.
Yeah, for sure.
Steve, any final words of wisdom to the listeners?
No, man. I think I'm gonna have to listen to this back myself so I can figure out what the heck he said and try and get a little bit smarter here. So I appreciate it, man. It's I look forward to checking out your podcast and seeing kind of what it's all about, because I want to if it focuses on, like you say, storytelling a little bit, but a different perspective than I may have in real estate. It's so strange that we can have such different perspectives and be in technically kind of the same business, right? Because when you're talking about investments, you're probably not talking about the investments of the little 1-bedroom condos that the people watching my channel generally are, right? They're totally different things, and they're financed different ways, and it's just such a different world within the same world.
Yeah, it is really interesting, actually, right? And I think that they're very there's two big gaps in clientele of what those are too, right? Like I think that there's a condo investor doesn't want to be exceptionally active at all, right? They'll because they want a lot of it to be managed, whereas like most of the landlords that I attract are people who want to touch and feel the asset and add value to it and whatever, right? So we're buying a lot of like shithole up down duplexes in random fringe market towns and doing gut jobs on them or whatever, right? So there's a huge gap. Then it goes back to what I was saying there. Like it's a big, broad market. If you can pick one single group to focus on and just treat them better than anybody else, create more value for them than anybody else, you will be successful no matter what.
I love it. Foch, where can people find you online?
I probably just Google me, and I think that the top platform that you're likely to click on is probably going to come up based on your Google search results. But I'm on TikTok, Twitter, Instagram, sometimes on YouTube, just Daniel Foch.
I'm looking forward to seeing more of you on YouTube.
Are you dancing?
Yeah, we'll see.
Please tell me you're not dancing on TikTok.
No, I might get into interpretive dance once I go bullish, but for now I'm I just point at charts like that. I'm actually obstructing them. They're behind me. People are you're I can't even see the chart, and I'm like, whatever. You don't need to. My head is the paywall. You have to pay me if you want to see the chart.
I actually wrote this down in my notes and forgot to ask it. Tell me about your hat choices. Do you get your hats custom made and you only put companies that have gone out of business on your hats? Is that how it works?
Yeah. So I started custom making them just because there was a couple extra ones that I wanted for for certain videos, but yeah, they're all I originally was actually, it started with Liquidity, which is a meme page for investment banking, and they have a Lehman Brothers hat. I have it right here actually.
Do you have a Blockbuster hat?
No, actually that's on my list, but I've been trying to get original ones. Yeah. So there's some I just have been buying more actual replica or not replica, actual nostalgic ones from eBay and stuff, like Bear Stearns golf tournament. But sometimes these things go for thousands of dollars. So, but yeah, I do actually have to get a Blockbuster one. That's a good note.
Because I feel like everybody has a thing that they're kind of known for, and you don't openly talk about it, but people start realizing wait, what's that company on his hat?
Yeah. Well, yeah, it is funny because in TikTok, it's always backwards, right? So, so it takes a lot to catch it.
That's awesome. Well, we will wrap this thing up. Thank you, man, so much for coming on. This was an awesome conversation. I'm really hoping the viewers enjoyed it. My signature sign off is very embarrassing, Dan, so I'm going to do it in front of you. It started on episode 1 where we didn't know what we were going to do with this. All right. Bye.
Thanks, Dan. Appreciate it, man. All right.